In the intricate web of economics, the principle of cause and effect reigns supreme. From individual choices to global trade dynamics, every action sets off a chain reaction, creating ripples that can be felt far and wide. This fundamental principle underscores the interconnectedness of economic forces, where decisions made in one corner of the world can have profound consequences on distant shores. The imposition of a 10% tariff on Chinese goods by the United States stands as a stark example of this principle in action, highlighting the unintended and often detrimental consequences of protectionist trade policies. Just as a stone cast into a still pond creates expanding circles, economic decisions send out waves of impact. These waves can be positive, leading to growth and prosperity, or negative, resulting in economic hardship and instability. Understanding the cause and effect relationships within an economy is crucial for policymakers, businesses, and individuals alike, as it allows for informed decision-making and a more accurate assessment of potential outcomes. The US-China trade war, initiated by the Trump administration's tariffs, provides a compelling case study in the complexities of economic cause and effect, demonstrating how seemingly isolated actions can have far-reaching and often unforeseen consequences. The decision to impose a 10% tariff on a wide range of Chinese goods marked a significant escalation in the trade tensions between the world's two largest economies. This move, widely seen as a miscalculation by economists and trade experts, was intended to protect American jobs and industries from what the Trump administration perceived as unfair Chinese trade practices. However, the tariffs backfired, igniting a tit-for-tat trade war that ultimately harmed American businesses and consumers. The tariffs, far from achieving their intended goals, disrupted global supply chains, raised prices for consumers, and created uncertainty in the business environment. They also failed to address the underlying issues in the US-China trade relationship, such as intellectual property theft and forced technology transfer, while simultaneously harming American companies and workers in the process. This miscalculation underscores the importance of carefully considering the potential consequences of economic policies and the need for a more nuanced and strategic approach to international trade. China's economic rise over the past few decades has been nothing short of remarkable. Once a largely agrarian society, China has transformed itself into a global economic powerhouse, boasting the world's second-largest economy and a manufacturing sector that dwarfs all others. This remarkable transformation is the result of a combination of factors, including government policies that encouraged investment and export-led growth, a vast and increasingly skilled labor force, and a relentless focus on technological innovation. Today, China is a major player in a wide range of industries, from consumer electronics and telecommunications to automobiles and aerospace. Its economic clout is felt worldwide, as evidenced by its massive foreign exchange reserves, its growing investments in infrastructure and technology, and its increasing influence on global trade and finance. The United States, once the undisputed leader in the global economy, now finds itself grappling with the reality of a rising China, a development that has reshaped the geopolitical landscape and created both opportunities and challenges for businesses and policymakers alike. The American automotive industry, once a symbol of American industrial might, found itself caught in the crossfire of the US-China trade war. China's retaliatory tariffs, imposed in response to the Trump administration's levies on Chinese goods, dealt a significant blow to American automakers, who rely heavily on the Chinese market for both sales and production. These tariffs disrupted supply chains, increased costs, and dampened demand for American-made vehicles in China, one of the world's largest and fastest-growing auto markets. The tariffs had a ripple effect throughout the American auto industry, impacting not only the major automakers but also countless suppliers, dealerships, and workers. They also highlighted the deeply integrated nature of the global automotive industry, where components and vehicles often cross borders multiple times during the manufacturing process. The trade war served as a stark reminder that protectionist policies can have unintended consequences, harming the very industries they are meant to protect. Section 5. The Shifting Sands: Manufacturing Costs and Competition. Beyond the immediate impact of tariffs, the US-China trade war exposed deeper structural issues within the American auto industry, particularly the challenges posed by rising manufacturing costs, and increased competition from Chinese automakers. China's lower labor costs, coupled with its investments in automation and advanced manufacturing technologies, have made it a formidable competitor in the global automotive market. Chinese automakers, once known for producing low-cost, lower-quality vehicles, have rapidly moved up the value chain, now offering sophisticated, technologically advanced vehicles that rival their American and European counterparts. This shift in the competitive landscape has put pressure on American automakers to innovate, reduce costs, and adapt to the changing demands of the global market. Section 6. American auto industry at a crossroads: jobs, prices, and uncertainty. The trade war's impact on the American auto industry extended far beyond the balance sheets of major automakers. It created a climate of uncertainty that rippled through the entire industry, impacting suppliers, dealerships, and workers alike. The tariffs, coupled with the broader slowdown in the global economy, led to job losses, plant closures, and a general sense of unease about the future of the industry. The tariffs also contributed to rising car prices, as automakers passed on at least some of the added costs to consumers. This, in turn, dampened demand for new vehicles, further exacerbating the challenges facing the industry. The trade war underscored the vulnerability of the American auto industry to external shocks and highlighted the need for a more comprehensive and forward-looking strategy to ensure its long-term competitiveness. Section 7. The Electric Revolution: China's Automotive Advantage. As the global automotive industry undergoes a once-in-a-century transformation, driven by the shift towards electric vehicles, China has emerged as a dominant force in this rapidly evolving market. The Chinese government, recognizing the strategic importance of EVs, has invested heavily in supporting the development of a domestic EV industry, providing subsidies, building charging infrastructure, and implementing policies to encourage EV adoption. These efforts have paid off, as China is now the world's largest EV market, both in terms of sales and production. Chinese EV makers, such as BYD and NEO, have emerged as global players, challenging established automakers with their innovative and affordable electric vehicles. Section 8. The Price of Protectionism: a look at Ford's losses. Ford, one of America's iconic automakers, provides a stark example of the financial toll exacted by the US-China trade war. The company, which had bet heavily on the Chinese market for growth, saw its sales and profits plummet as tariffs disrupted its supply chains, increased costs, and dampened demand for its vehicles. Ford's experience serves as a cautionary tale about the perils of protectionism and the interconnectedness of the global economy. The company's losses highlight the complex web of relationships that define the global automotive industry, where disruptions in one part of the world can have far-reaching consequences. They also underscore the importance of free and fair trade for the health of the global economy and the well-being of businesses and consumers alike. Section 9. A trade war's toll: higher prices, strained consumers, and an uncertain future. The US-China trade war, initiated by the Trump administration's tariffs, has had a profound impact on the American economy, contributing to higher prices, strained consumers, and an uncertain future for businesses and workers alike. The tariffs, far from achieving their intended goals of protecting American jobs and industries, have backfired, disrupting global supply chains, raising costs for businesses and consumers, and undermining economic growth. The trade war serves as a stark reminder of the interconnectedness of the global economy and the unintended consequences of protectionist trade policies. As we move forward, it is essential to reflect on the lessons learned from this trade conflict and to chart a more sustainable and mutually beneficial path for the future of US-China economic relations. What will be the lasting legacy of this trade war? Will it serve as a catalyst for much-needed reforms in the global trading system, or will it further entrench protectionist sentiments, leading to a more fragmented and less prosperous world? Only time will tell, but one thing is certain: the decisions we make today will have far-reaching consequences for the global economy and the well-being of generations to come.